How to generate profits when you expect your asset to move sideways or higher. On Divergence, this can be done by having a long asset position and selling a binary put. We'll show you how your payoff looks using this strategy. First, let's say you own 1 Ether. Your profit or loss is linear. You get the price difference to your entry at the time you sell it. If you sell a shield token using a fraction of a stablecoin like Tether, you are selling a cash or nothing put. At expiration, if the Ether price is above your strike, you keep the premium you collect as a seller. Otherwise, you lose 1 Tether. Your loss in this case is the difference between 1 Tether and the premium you collect. Now, let's see what happens when you long 1 asset and short 1 cash or nothing put. Suppose your cash or nothing put has the same strike as your asset entry price. Your asset position will be underwater if its price drops below your entry, and you lose a fixed amount of cash in your short binary put position. When the asset settles above the strike price, your asset makes you profit, and you get paid the premium of your short binary put position. Unlike selling a standard put, your risk in selling a binary put is limited. Sometimes the risk reward is better when you sell a binary put at a strike above or below your asset entry price. As you can see, this strategy will be used when you're bullish. If your asset continuously moves higher, you can sell a strip of binary puts at different strike prices. Anyways, let's remind you that options trading involves risk. This is not financial advice. We hope to see you soon trading on Divergence. If you have any questions, you're welcome to come and ask in our Discord or Telegram channels.